Can you hear me?
Yes, we can hear you.
Okay.
Let's have you pull up your slides. So hover over your face, share screen, and then slides.
Okay. Share screen and Chrome tab. Okay, and I think there's a button 2%. Hold on.
All right, perfect. Feel free to get started.
Okay. All right. So, can I get started right now? Yeah.
Yes. Go.
Perfect. So yeah, thank you everyone. So today I'm just going to cover surviving 51% attacks in blockchain. I'm Yaz. I work at developer relations at C-Lab, working on Celo. A little background about me. I've been a developer relations in crypto community since 2018, and been a member, like a crypto community member since 2016 before that. My background is software and hardware engineering. I've worked on Ethereum Classic. I worked on Ethereum briefly with on the enterprise level, and now I work on Celo, and I really love the EVM. So run EVM, right? So for the agenda, I'm going to condense it. This is originally my DEF CON talk from yesterday, but I'm going to condense it just to skip any of the basics. So briefly going to cover what is Nakamoto consensus, reorg and 51% attack, and then we're going to dive into the recap of the first 51% attack on ETC last year, and then we're going to cover the following two attacks, and we're going to cover the impact of those attacks and what were the solutions proposed on chain and off chain, and briefly we're going to look at MEV reorg specific attack and what can be ways to mitigate against those. All right, so let's go over understanding 51% attacks. So what is Nakamoto consensus? I'm not going to dive deeply into it because George just talked about it earlier, but basically it's a solution to the Byzantine general problem requiring proof of work. And the consensus is based on how the longest chain is the most valid chain. The innovation here, the most important innovation in the Bitcoin white paper, and it solved the general problem up to 51% of the network. I'm not going to really dive deep into uncle blocks, but the gist of it is because there's what happened in a situation when you have two blocks being produced at the same time by two independent miners. In this situation, you have like a temporary split in the network, and whichever chain, if you look at here in the split here, whichever chain splits, find the next block, which is block number 14, become the canonical chain. So the other block that was discovered at the same time become the uncle block. And uncle blocks, there's a reward for mining them. So miners are incentivized to mine them, but only up to 6 block header from the chain head. So from the tip of the chain, going 6 block deeps, the reward keep on decreasing for having the uncle inclusion reward. Let's talk about reorgs now. So a reorg, as was covered earlier, is an event where the block that was part of the chain that was canonical and its children blocks are replaced by another chain that has more work generated, which is the longer chain. It can happen for multiple reasons. Like let's say a country with a lot of mining power suddenly gets disconnected from the rest of the network that is more global and stuff. And that would result in a split of the network temporarily and say. But because it has the most mining power in the country that went offline, the moment it goes back online, it has more proof, like more work generated, and that would, when it connects to the rest of the global network, that would create a reorg. That's kind of rare to happen. We haven't seen that kind of situation happen that much, but the most common kind of reorg are attacks, 51% attacks, which is what we're going to cover today more. And they happen so an attacker would look at block number 10, let's say, and will mine in privately block number 11 to 16, assuming they have more hash power than what is the canonical honest thing. And then basically they're not peering with the rest of the network. And then when they feel like they have enough work generated, they can reveal their blocks to the rest of the network. And from block number 10, all the other nodes see oh, this chain has more work generated than what we already included. So that's when a reorg happened. And what happened is all these transactions and the original canonical chain gets removed back to the transaction pool, and then they need to be reconfirmed, included in a future block. So with that said, let's cover what happened last year. Overview of the ETC 51% attacks. I like to call it the hot 51% attack summer. So there were three 51% attacks happening in the late summer 2020 on ETC. Before that, there was another 51% attack that happened on ETC in early 2019, but that one was already, the analysis been done on that one. So we're just going to cover the three that's been from last year. All attacks resulted in double spend attack, which we're going to cover later. But the last one is not clear how much. The block depth kept on increasing with every subsequent attack. The victims were centralized exchanges. Losses were in the millions. And the mining pool got reorg. They lost a lot of their block reorg, and it became an interesting situation where they were like, really sad about it and stuff. And it was something people didn't anticipate, especially when the reorg depth is really high. So let's break down the first attack. So I was woken up at 4 a.m. on a Saturday night by Hudson Jameson calling me, telling me that, hey, there's a 51% attack on ETC. Like early, late, I mean, it's like technically early morning, late night. But anyways, I was working with the Open Relay team that discovered that attack. And we did some analysis. So we discovered, yes, the network was 51% attack. And the block depth were 3,594 blocks from blocks 1090, 4146 to 1090, 7740. The offending miner was 0x75D, that's their address. But the most interesting thing about the attack was not the double spend or anything like that. It was still a big thing, but it was that the ETC network was split into two chains that wouldn't merge back into or reorg back to one canonical chain. And we'll talk about why. The main reason is sort of a thing in client called reorg cap. So what is a reorg cap? So immutability in networks is specified to be unlimited. It's from a specification point of view, like transaction finality is once it's done, it's done. But with reorgs and stuff, that can change. However, there's another reality called a reorg cap. So reorg caps are local to the client design. So every client has a specific limit on how much reorg it can accept, how much in terms of block depth. And currently, there's an inconsistency between Open Ethereum parity reorg cap, which is 3,000 block depths, and Geth. Geth has a reorg cap of 90,000 in a full node. This consistency still exists today. So hypothetically, and I think this is impossible to happen because it's so expensive to do, but if a hacker with enough capital wants to do it, they can, and assuming Open Ethereum has enough node, but I think it's not going to be fully supported after London. Excuse me. If an attacker wants, with enough capital, they can split any EVM network that has enough Open Ethereum and Geth nodes, as long as you hit more than 3,000 block depths. And if you recall, here, the block depth with 3,594 blocks, right? So that was the reorg was higher than the reorg cap. So what happened in parity? Parity clients were like, okay, we're seeing a block that like a reorg happening or 3,594 blocks, but my reorg cap is 3,000. So therefore, I can't accept this reorg, and I'm continuously mining on the older chain or the the canonical chain, but not the non-reorg chain, right? Geth based, the Geth node, which in ETC is a fork of Geth called Core Geth. It would just make it more compatible with Ethereum Classic Network. But basically, because it had a reorg cap of 90,000, it accepted that 51% attack, and that became the more canonical chain. And the reason for that is because Geth has the majority of the network. So those two. Then we had a situation where node operators and miners were running parity like, hey, there's something wrong. We can't pair with the rest of the network, and it became very unstable and stuff. That was a very challenging time at the time because the mitigation strategy there is you would have to reach out to everyone that you think is running a parity node and recommend they either delete their chain data and resync from scratch. Resyncing is good because if you resync, you don't see the reorg event anymore because you're resyncing with the rest of the peers and stuff. And reorgs are local to the node. Only the node can see them, not the whole network necessarily. It's not stored in the network data. So that was local to the node. So resyncing would work. Recommendation to remove all your node and start syncing Geth. And the reason for that is because if you an attacker hit higher than the Open Ethereum 3,000 block depth limit, it probably might happen again, which turned out to be true later. Stuff. So the majority of the network accepted the longer new chain, and which contained a double spend. Now I'm going to briefly talk about a double spend attack. If you folks have more questions, like just for out of sake of time, we can talk in chat. But a normal 51 like double spend attack is, we covered already a 51% attack. How would it happen? On block number 10, you're mining block 11 in private. You're not revealing your block. So as an attacker, what do? On block 11 on the canonical chain here, assuming you have a large wallet with a lot of funds, what you'd want to do to perform your double spend attack is you want to send that money to a centralized exchange, say Coinbase or Binance or whatever. And to perform the double spend, you would need to first trade your Ethereum or your Ethereum Classic or whatever coin it is, and you trade it for another coin that's on a separate network. Let's say here in this example, the attacker is moving Ethereum to centralized exchange like Coinbase. They trade it for Bitcoin for the same value in Bitcoin. They move their Bitcoin out of the exchange, right? And then they're at the same time they're mining on a private network. So on what they would do on block number 11 on their private network is the same account that they transferred on the canonical chain, they would move that same amount on the private chain to another account, not necessarily to a centralized exchange, but more to like another Ethereum account, let's say. And we'll talk about why in a brief second. So what happened later, the attacker, they already have their Bitcoin on a separate network. They move that money, and then they reveal the attack, like the new chain. That already had a higher amount of work, so it's going to reorg the network. And now the original transaction that was sent, like in block number 11 to the centralized exchange, and all these subsequent ones will be moved back to the transaction pool. Now, let's say if the transaction that was removed goes back to the transaction pool. If it gets included in another block, it would repeat the same transaction of moving it to the centralized exchange. But because the attacker on the block number 11 on the private network, they moved that same account, the value in that same account to another account, when that transaction tries to attempt to get mined, it will be invalid because that same, like, the amount isn't there anymore, right? So therefore, the attacker gets away with their Ethereum, the same amount of Ethereum they had, and they have Bitcoin now, and they can, they double spend effectively. So what is the impact of the first 51% attack of the summer? So we covered there's been a migration away from Open Ethereum. 3,000 block reorg cap was too risky. Recommendation was moving to a guest-based nodes, which were the majority of the network, on Hyperledger-based Zoo, which is more like an enterprise EVM client. Some folks chose to restart their OE nodes. It resulted in a more centralization around one client development team, but that was a trade-off people were willing to make in the face of a 51% attack. And George already covered this, but we can talk about why later. There's been a heavy increase in block confirmation depths on Coinbase, like up to, I think it was originally 2 weeks already on Coinbase. A few other exchanges followed. There were risks of delisting ETC, like from specific centralized exchanges. And about 807,000 ETC was stolen in the double spend attack, with the victim being OK Exchange. So let's cover briefly what happened in the two following attacks. So the second attack happened a week later. It was a higher block reorg depth, which was 4,236. The double spend amount was 465,000 ETC. So I worked briefly. BitQuery did a lot of analysis that I briefly looked at and helped them analyze. They looked at, they found one of the victims to be Bitfinex. It wasn't the only victim because the attackers spread their after the double spend, they spread their Ethereum Classic around and stuff to several different accounts. Majority were guest nodes, so most of the network moved away from Open Ethereum at the time. The attacker, the funny thing is, the attacker, well, I mean, it's not funny, but like it's just kind of interesting. The attacker used the stolen fund from the first 51% attack to do the second one. The third attack was like actually kind of weird. It was a 7,000 block deep reorg. That was about 2 days worth of reorg. And from a mining pool perspective, that was like awful because they lose like 2,000, they lose 2 days worth of mining awards. It wasn't clear what was the double spend amount, but it happened right around after the community had a call to find ways to mitigate against those attacks. So NiceHash played a huge part of it. NiceHash would tell you that even though like, the order came from NiceHash doesn't have any inventory. They don't own any ASIC or any GPUs and stuff. They're just a market maker for folks who have GPUs that they're available for rent, and people who want to rent them out or bid on those rentable hash power. But one of the interesting thing about this was shown by BigQuery was you see that spike here in the first attack and the second attack. This is for Ethash marketplace. So it's like NiceHash doesn't say, hey, you want to rent mining power for Ethereum or Ethereum Classic or or whatever. It's more like which hashing algorithm specifically do you want to rent for. And you see here, like for the Ethash market, there was a spike around the time of the 51% attack, which indicates that the attacker rented hash power using NiceHash and directed at Ethereum Classic for the 51% attack. So let's talk about impact and mitigation of the 51% attacks and what happened after. So the impact of the 51% attacks. So centralized exchanges increased block confirmation. We kind of briefly covered that. Increased it to 2 weeks to blockchain confirmation. And the reason why they would want to do that, if you remember here, if I'm an attacker on the canonical chain, I want to deposit my Ethereum and trade it for Bitcoin while I'm mining, like in private, to do a double spend. All the centralized exchanges have to do is increase the blockchain confirmation. So if you make a deposit, instead of like 6 or 20 block confirmation, by increasing it so much to like, let's say 2 weeks of blockchain confirmation, it makes it super expensive for the attack to deposit it and at the same time maintain mining in private with a lot of hash power. That's going to cost them a lot of money at the same time. So it really mitigates or really like moved away from like targeting exchanges as long as you increase your block confirmation. The other interesting thing is if you read the Bitcoin white paper, Satoshi talks about majority honest miners. And what does that mean? It's like if you look at Nakamoto consensus from a security assumption point of view, you can only have majority honest miners on a majority network, right? So ETC was using Ethash, but it was a minority chain because the majority of the Ethash market was on Ethereum. So by definition, a majority honest miner on Ethereum is not the same as a majority honest miner on ETC, even though like it's sharing the same algorithm, it's like a hashing algorithm. So it was clear that ETC was not following Nakamoto consensus security assumption because there is no such thing as a majority honest miner in the world of like miners using the same equipment but mining on separate network at the same time. So another attempt was try to do KYC on NiceHash by order, working with that company. It didn't work. They're very unresponsive to these kind of requests. They say and they're not based on US jurisdiction. The ETC Labs team worked with CipherTrace and legal work against basically they tried to find an angle if 51% attack that is rentable on NiceHash is in violation of the Computer Fraud and Abuse Act, which is the CFAA, because the angle was you're enabling selling hash power as a cover for money washing. So that was one approach after the impact. Chain analysis on tracking stolen funds. You can do a lot of sophisticated chain analysis, but if the attacker is moving to several different jurisdictions in exchanges that are outside the U.S., let's say if you move it to Russia or any other country with outside U.S. Jurisdiction, it becomes almost impossible to track it down after. Honest mining pools lose their reward. We talked about that. There were delisting risks, and the worst one was network instability because there was lack of trust in the network. So we'll cover briefly solution proposed on chain. They're also linked, so you can click on them later if you want to read more about it. But one of them was the hashing algorithm change. It's a very popular implementation, suggestion. If you remember what we talked about before, majority honest miners need to fulfill Nakamoto consensus security assumption. And the way to do that is not to be a minority chain using Ethash, because Ethash is like Ethereum's hashing algorithm, right? So the idea becomes you can stay proof of work, but modify the hashing algorithm to be a hashing, specify a hashing algorithm that has its own market for your network. And SHA-3 was a very popular implementation. Another one was modifying ETH like to some degree that it becomes like a completely different algorithm. So that was like very popular in the community, but it hasn't been implemented yet. There's no hard fork that changes the hashing algorithm. MES stands for Modified Exponential Subjective Scoring. It's based on ESS, which was written by Vitalik before, but MES is specified by the ETC lab team. Basically, on a node level, it allows you to add subjectivity to how you perceive block coming later. And like the further along the, like let's say you have a reorg happening and your node sees it and it's a very big reorg. Like the formula becomes like an exponential that it makes the node more subjective to longer reorg, but not necessarily reject them, but it just takes a lot longer for it to accept them. And that kind of like minimizes that kind of impact from reorgs. Checkpointing was not very popular because it kind of defeats the point of Nakamoto consensus, but it was one of the proposals. Basically, trying to checkpoint with another external node outside the network and determining what works. Going back, rolling back. Merge mining with Bitcoin by rootstock was not a very popular idea, just because philosophically, you're tying your security to Bitcoin, right? And from a user experience, if I want to run a node for Ethereum Classic, I would have to run the entire Bitcoin chain history as well. Like I need to sync in Bitcoin node along with the ETC node just to run ETC. So that's not very desirable, even though like Bitcoin security is very powerful. So proof of proof is just like a random proposal by Veriblock. It's basically a solution no one wants because it's trying to just do a proof of proof on like the state. It kind of applied to proof of work. They have a proposal for Bitcoin, but it's not a very popular proposal in ETC, in Bitcoin, anywhere. So it was just like, but it was there with one of their suggestions. There was a penalty system. PearlGuard, it's like a network called Pearl, and it's like inspired by the Horizon penalty system. Basically, say you have a specific K equals like the block cap, like block reorg cap, let's say 60. So if you go higher than 60 in a reorg, that kind of like what it does is it will create the penalty. You have to pay for the penalty in order to, because you're doing that, and it kind of like minimizes these kind of attacks. But the problem with it is it introduces a whole new different types of attack that can fragmentize and split the network very cheaply, and like it also introduces eclipse attacks. So off-chain solution, defensive mining was one of them. Basically, if you have a honest mining pool who are ready to provide their hash power in case there's a reorg happening, they would defensively mine the network to include the original canonical chain with transactions and stuff, and just to like attack, like to defend against the attacker. Now, the problem with this approach, it's become net negative. The attacker and the defendant, attackers, defenders will continue reorging one another until one of them runs out of money. Increased monitoring is something that is really, really needed. So one thing was NiceHash monitoring. It was clear that, we need to do more analysis on NiceHash and where the order book's coming from. So ForkWatch is a project that I built just to do analysis and find anomalies in the entire NiceHash market. Reorg monitoring, so it became clear that we need to look at, do monitoring on reorg and alert when a reorg with Doublespend happen. So the reorg tracker by James Lovejoy is a great example. There's a great thesis he wrote about reorg in general and why they built the reorg tracker, and I really recommend everyone to read it. Mining pool monitoring. So in this scenario, I'm a miner. I have an ASIC. I can put my ASIC or my GPU with any mining pool globally. And basically, anytime there's a new work happening, I try to compare the previous block header to what is public on the network. And if there's an inconsistency between the block header that I'm mining, like the previous one, and what is on the network, it might be that I'm mining in private, like the mining pool picking up work mining in private, and that might indicate there's a malicious attack happening before it happens. Pool Detective, I recommend checking it out. It's an example by MIT DCI. You can run it right now. The other thing is dynamic block depth for confirmation. So instead of Coinbase putting like a 2-week block confirmation, it becomes more dynamic depending on the value of the transaction being deposited. So let's say I deposit $10 worth of Ethereum or Ethereum Classic or whatever into Coinbase. I shouldn't have to wait 2 weeks for that deposit to confirm just because it's $10. But if it's like if it's like millions of dollars, obviously it pays off more to wait longer confirmation stuff. So dynamically adjust based on the value of the transaction being deposited. Delayed withdrawal on centralized exchanges in another proposal is basically you allow for instant, or not instant, but like, whatever deposit, block confirmation you had before on a centralized exchange, but you delay withdrawals like for 2 weeks and stuff. So basically, people can deposit, they can trade, but let's say if I'm an attacker, I'm trading my Ethereum for a Bitcoin. I can't withdraw it right away. I would have to wait 2 weeks. So that way, it doesn't minimize the user experience, but it kind of like discourages a lot of the withdrawals and trying to perform these kind of attacks. So I just want to give a screenshot of Forecast, the app I built. So one of the cool things that on this app is we were able, back in around November last year in 2020, we were able to detect the Gwyn Kakatu 32 algorithm spike. And this is when Gwyn, the network, had a 51% attack. So we were able to determine that the attack came from this hash. Like there was because you see that spike. When a spike like that happened, it's because the amount of hash power decreases, available for rent, and the price increases because it's more scarce, so there's a higher demand of it, and that kind of indicates there's an attack coming from nice hash around there. So as a bonus material, we're going to go over reorg in MEV really quickly. I'm not going to cover MEV. I'm assuming everyone knows MEV here. So MEV reorg attacks, it's like a new attack vector specifically for Ethereum due to the high value MEV found in transaction pools. It's the latest area of research in 51% attack vectors. Like the whole idea of reorg.wtf it's a very interesting new area of research that we're all talking about. It differs from what we covered earlier in 51% attacks for Doublespend because it's a smaller block depths, like 1 to 2 to 3 block depth reorg. That's the way you would want to attack in an MEV reorg attack scenario. It's net negative effect, obviously, because if miners start, reorging one another on 1 or 2 blocks deep, it creates a huge network instability and it becomes very problematic for the network. Mining pools said they won't reorg the chain, but it's still to be seen. So what are potential mitigation minimization strategies? And these are just very opinionated from me, and it might not be all all the solutions yet that we can discover. But basically, if we increase block rewards, like an example, EIP 3143, basically larger Uncle rewards will incentivize better mining, like a healthier mining ecosystem, because I'm more incentivized to mine Uncle reward on the canonical chain than to be hiding in on a private chain trying to attack the network and stuff. And the other important thing I think that should be covered is including Uncle hash rate in the longest chain calculation. Because if I'm a miner, I'm including Uncle block trying to get the reward. It doesn't it's really good to actually include the hash rate of that Uncle into the longest chain. And that kind of increases the hash rate of the longest chain compared to the private network when an attacker is attacking, because the attacker, they can't they're mining on their own. There's no Uncle in that scenario, right? Monitoring Uncle and reorgs. I think a few more folks going to cover that more in depth later, but we covered analyzing nice hash and stuff. So layer 2, that was a proposal, layer 2 Oracle to determine canonical chain, and as a checkpointing system. Basically, if I have a system or an Oracle on Optimism or Arbitrum, and I'm monitoring the layer 1, if there's a reorg happening, it will be like an Oracle kind of system that determines what is the canonical chain, what people should follow. But the problem with this approach is, for layer 2, you still have to submit that transaction back to layer 1 to be confirmed that the design of the system. And if there's a reorg happening, the attacker on the layer 1 can just reorg that layer 2 transaction, so it never just like blacklist that kind of transaction. And therefore, the oracle kind of defeats the purpose of the oracle. I really like timeliness detector by Vitalik. It was like a blog post. Basically, it makes nodes more aware about time, and if like something happens later and stuff, like from a node perspective, the shorter like a reorg happened, like appears in time, it means less malicious thing. But if the longer it happens, it appears in time. It could mean an attack is happening and stuff, and it's like a system for disincentivizing it. Another non-obvious approach is social pressure. So mining pools are a brand or a company. So if a mining pool would actually try to reorg the network, that would destroy their brand, and miners would have to move to a more honest mining pool and stuff. So that could be another tactic. One that I really, really like is EIP 3534. It's a better transaction type for Ethereum that would specify which parent block header you'd want your transaction linked to. So let's say I'm submitting a transaction into the blockchain, and I say I want it to tie in with the block header of whatever the blockchain, like the current blockchain head is. So if let's say it gets included right away, like in the following block, as long as it's tied to the chain head of like the hash of that chain head that I specify in the transaction type, it's a valid transaction. And if a miner tries to reorg that transaction, it becomes invalid because that chain head is no longer there. It's a different chain head when they do the reorg and stuff. The other thing included in that transaction type is like specifying how many blocks deeps you want your transaction to be in. So and also whitelisting specific mining pool addresses. So like, let's say if there's a mining pool that's very malicious, you can avoid those kind of mining pools. When you submit a transaction, that it becomes impossible for that mining pool to mine it and stuff. And last but not least, there's more research needed. I think that's why we're having this unconference. And yeah. So yeah, I want to thank you all. Here's my email if you have any questions. I'm on Twitter. I'm happy to answer Q&A, and if you have any questions in the chat as well. And I'm going to stop sharing.
Thank you, Yaz. This was very impressive of a presentation. Thank you for setting the stage. Let's take the questions on the side chat, and let's move on to Samuel's talk. It will be on L2 fast finality and reorgs.